All right, good afternoon, everybody. Welcome to TraderMerlin Show. It is your Friday edition. It is the 14th of April. Good to see you all. Just in the scatteredness of trying to get the show ready today, I was running downstairs. I usually keep a bottle or two of whiskey for the Friday show upstairs, so I grabbed myself a nice glass, put an ice cube in there. I cleaned up my office the other day, and I took the bottles downstairs. So I am drinkless, but I will air cheers you a nice ice cube in a frosty glass. All delicious. Anyway, happy Friday, everybody. TGIF for sure. I'll have my beverage once I go downstairs. And anyway, here's what we're going to talk about today. You see the graphic. I tried to have some fun with this because it was the kickoff for earnings season. So I asked AI to generate me a picture of a race and a little bit of competition going on. And you can see in the graphic, I tried to make it somewhat in tune with their AI. I have the earnings season on the left. I've got Trading Week wrap-up on the right. You can see Citibank. You can see BlackRock. You can see Wells Fargo in that race there. And JP Morgan on the marquee at the end. The big winner for the day. We'll talk about that here in just a second. I know, Linda. It's totally not exciting. It's kind of boring. Anyway, we'll get... We'll definitely catch up for it later, although the weather is absolutely horrible out here today. So let's start things off with the economic calendar, the earnings calendar, and we'll go from there because clearly today the story was about earnings, lifted up almost the entire financial sector. But if you look through those 11 different indexes that split up the S&P 500, it really was not a great day for our markets. Most of the stuff was down. I'll look at that here in just a sec. So here is your economic calendar. Now, going through the data, we talked, of course, about CPI and PPI, which are the best, I guess, the most impactful news for the week. But we do have some stuff going on here. You've got retail sales numbers came out today. Very disappointing. They're expecting it to go from negative 2% to negative 0.4%. So, you're really looking at a contraction of retail sales, meaning people spending less. And that was anticipated, although it came out at negative 1%. So a full 1% decline there in the retail sales numbers. And when you strip out larger components, it's same picture. So pretty ugly going. Hey, Chris, happy Friday, my friend. Hope it's nice and dry up there in NorCal because it's ugly and muggy down here in SoCal. That's pretty much your major piece was just those retail sales numbers, and that is obviously not a good thing. We've had this decline in inflation. We saw the CPI year over year drop to 5%. Expectations were it was going to go to 5.1. So that's great, but remember, part of the reason why you're seeing inflation numbers drop down is because spending has declined. Retail sales numbers are reflecting that people aren't buying as much, and if that continues, it goes in that conundrum that we've talked about for about a year now, which is if people are spending less, great, inflation comes down, but so does unemployment start to rise. So does the GDP number start to decline, and then all of a sudden it shifts to other data not looking so good. So that was your major pieces for today. Now, at least economic data was a driver earlier in the week or midweek. Really, today, it's about financial stocks. So here it was. When is a misexpected earnings week? Well, I don't know. I'm not sure I understand that one, Pepe. You're down here, too. You got the muggy, ugly weather. Hopefully, it'll clear up this weekend. So here's the big stuff. JP Morgan Chase came out with earnings today. They beat by 20% on their earnings. Crazy. Correct, Margaret, not buying cars. And as I mentioned a couple days ago, wait to buy a car. If you're looking to buy a car, wait. You get another 6 months. I think you're going to get some sweet deals on cars. Maybe a little longer than that, but yeah, I think they're going to have a bunch of inventory and be scrambling to get rid of it. But look at the banks here. We've got Citigroup, which of course mentioned. Actually, I put Citi's logo, not Citigroup's logo, but they beat earnings as well by 12%, jumped up almost 5% on the day. JP Morgan beat earnings by 20%, jumped up 7.5% on the day. Looking at Wells Fargo, right? Wells Fargo beat earnings by 7%, and they were just slightly down. BlackRock, the juggernaut out there, they beat by about 2.8% on earnings, and we're up 3% on the day. So financials are really the star of the day. And you can see by this chart here, this is Citigroup. So it was kind of a gap and go. Just jumped up and kept on running. Same thing here for JPM. JP Morgan really looking like the big one. And I actually was really debating shorting this one today. As you guys know, I am long JP Morgan shares. I have sold calls at 132. So my my shares are going to disappear from me, so no big deal there. I mean, they may. I'll explain that here in just a second because that was a question that came from a viewer. But you can see we drew this line at 135, and I was like, you know what? I watched it open up this morning. I'm like, oh man, do I want to take a short position on this? And I had to do it in a different account because you can't have a boxed position, which is being long and short in the same account. But I was like, let me think about it. I waited like 10 minutes. I said, you know what? I just don't want to make that trade. And glad I didn't because I would have been stopped out. You can see it was not just gapping up, but ripped all day long. Here is let's just do a 15 minutes. So you can see kind of the earnings announcement. That's over here in this. Is this a gold color? What color am I looking at, guys? Where it's like pinkish, beigeish, gold? I don't know. I'm colorblind, so it makes it rather difficult. But you tell me. There's the blue one, which represents once the market closes for the day, and this is right before it opens, the pre-market. So you look at that earnings announcement, which came out about 3:45 Pacific time in the morning, ripped up, sold off a little bit, then right on the open, it just ripped and pretty much kept on going from there. So that was your JP Morgan. Luckily for me, I did not short. I really wanted to, but I just used my better judgment and knew I was long on it anyway, so I'll let it go. It's peach color, Pepe? Thank you. Great. The colors I can't see. I'll tell you one story about my color blindness a couple years back. How I found out about my color blindness was really a very comical story. Unfortunately, I have no whiskey here to drop my inhibition, so I will tell you that story because it's pretty embarrassing. Anyway, there's your JP Morgan for the day, and again, Citigroup looks just like this. What I want to do though is look in contrast to the other parts of the market. So Dwayne says, do bank earnings add additional volatility to the market? Hell yeah, they do. You know, if you look at the overall market sentiment today, so let's just look at the top here and go through the indexes, right? If you look at where we were today from the index perspective, NASDAQ, pretty much unchanged, right? Not even a really wide range. I kind of expected this to be bigger. If you look at the S&P 500, slightly down, but really at the end of the day, that just reflects indecision, right? You have a topping tail, bottoming tails, and the real body, which is where it opened and closed at. The difference between those two is called the real body. Really not a lot going on here, right? Really not a lot happening on the S&P. Whereas yesterday, the real body was massive. It's just this huge green candle. Today reflects indecision. And let's go up to the Dow, right? Dow is down almost 0.25% today. And same thing, just this indecision candle. But now let's split it up and look at the different S&P sectors, which really paints a very different picture here. And I'll start at the bottom. Here's real estate. That's not indecision. That was just getting crushed, right? You got to love that. XLU, same thing. Gap down, sold off all day for utilities. Healthcare, similar picture. This is actually a great example of a bearish Harami formation. If anybody wants to have a potential trade set up for Monday, keep your eye on healthcare as a short because of that. Now, we talked about that the other day, right? We talked about healthcare having a shooting star on April 11th. It did not meet the criteria to go short. Said get ready for it. It might be, but we didn't get it. So we have a situation now where we have a bearish Harami on healthcare. So keep your eye on that one for Monday. I will make a note for myself as well. Building materials, right? Building materials also bearish Harami formation. So really nothing looks like financials today except financials. Technology down 0.5% today. Spinning top, there's your SPY. We talked about the Qs. Industrials. So industrials were down on the day, although it shows a green candle. Still nothing noteworthy. Here is consumer discretionary. Great, green candle, slightly up, but the candle represents indecision, even though it's up. Same thing with energy. Right? Energy, little spinning top formation right in that overhead supply. That's not a very positive sign. And then you have financials, which not only broke out above that 32.54 mark, which you had that line drawn, but gapped up, and boy, it just feels like it wants to keep on running. So, I go to Dwayne's question, do bank earnings add additional volatility to the market? I would contend that the bank stocks are what helped save this market from a much bigger decline. Because imagine if JP Morgan had missed. Imagine if Citibank or Wells Fargo had missed earnings, right? They beat and by a good margin. But if they missed, then all of a sudden you'll start to see more selling pressure, and we could have had a 2% down day easily if JP Morgan and financials missed. It felt like financials actually kept this thing up. So to answer your question, Dwayne, absolutely. And anytime you get a heavy market sector reporting earnings, I love today for a reason. Today is predominantly bank stocks. And you go run down that list, there was not just BlackRock was out there as well, but you had PNC Financial and a few others. Next week, Monday, Tuesday, Wednesday, you've got Goldman Sachs, you've got Bank of America, you have a lot of major firms reporting next week. So that, again, can have a big impact on which way the market goes. Now, historically, it seems to me that when you have the kickoff to earnings season, glorious as it seems like it was today, right? Really not much missed today. Let's see, who missed? Actually, everybody beat earnings on my list here. I'll share it with you, so you have to look at my ear canal. But JP Morgan, United Health Group, Citigroup, Wells Fargo, BlackRock, PNC Financial, they all beat earnings. Everybody beat, right? What that does is psychologically, going into the weekend, the media is going to now say what about earnings season? Headlines going to read, markets off to great earnings season start as most companies beat earnings. And that will probably, going out on a limb here, well, that will probably lead to the beginning of next week, more positivity, more people anticipating companies beating earnings and a market rally. Now, granted, we had great earnings today and the markets did not perform that well. So there is something holding the markets back from really wanting to run. But typically when you get a kickoff to earnings season like this, it's pretty good for the markets. Now, I'll show you some charts here in just a second, but let me make sure I get to all the questions. Listen to old episodes. One is the TraderMerlin Blackjack episode. You know what, Jay? You and KF have asked me that multiple times, and I said I was going to do a show called Why the House Always Wins. And that's, you look at casinos around the world, whether it's Monte Carlo, whether it's Las Vegas, Atlantic City, all these giant concrete structures with theme parks and all kinds of crazy crap in there. It's there because of the house always winning. And my philosophy and what I try to teach in all my classes and, even helping you guys out here is be the house. You have to put those odds in your favor and be the house when you are making trades and not taking big risks, because casinos want you to take the risk because they know the probability is better for them over time that you as the consumer is going to lose. So I should do it, Jay. I just haven't taken the time. A lot of times for those types of shows, I need to sit down and pre-produce a bunch of materials and get the slides right and make sure I tell the story with graphics. I just haven't really had the time lately to do all that. So I'll get to it eventually. How they always beat earnings? Come on, Pepe, you know the answer to that. How do stocks always seem to beat earnings? Not all of them. How do the majority of stocks always seem to beat earnings? It's you lower your forecast, right? If you know that you're going to make 10 cents per share in the next quarter, what you tell everybody is, we're going to make 9, we're going to make 8. So everyone's thinking, okay, they're going to make 8 cents, 8 cents, 8 cents. And you already know you're probably going to make 10. So when earnings come out, you're like, yeah, we beat earnings again. Look at our track record. That's part of it, right? How about FRC? Do you think it will recover? Good question. So in full disclosure, I had 40 puts today that expired worthless, so I'm pretty happy about that. I actually have 20 puts that I sold a couple days ago on FRC, and that is for the $12 strike. Let me adjust my price here just so I can keep those lines on the screen. I got the $12 strike. It was great premium. I had like $1.35 worth of premium, so given the fact that the price at the time was right around $13.50, it's a 10% trade for 2 weeks. Now, if it gets down below $12, I'm going to be put those shares. I'll be long FRC, not at $12, but if you take $12, subtract my $1.35, my average price on FRC would be $10.65. So that would be my break-even point on this one. But do I think it's going to recover? I'm not sure about that one. This one, I'm hearing more and more talk about how bad a shape they are in. What I do like is that JP Morgan, Bank of America, and 11 other banks each put in collectively put in $30 billion to bail them out. So that's a pretty big backstop to prevent them from collapsing altogether. I can't imagine JP Morgan and Bank of America going out there and backstopping a company that they felt that they were certain was going to go down, right? The government, they do stupid things with their money, but JP Morgan's for profit, so is Bank of America and all these other banks. They're not going to put up $30 billion if they thought this thing was going to zero, which is why I've been selling puts on this pretty much weekly and getting just great rates of return. That said, it's extremely dangerous. I would say it's very dangerous to be selling these puts because you saw what happened with Silicon Valley Bank. You saw what happened with Silvergate. You sell those puts, and right now I sold the puts at $12. So let me ask you guys this. What is the worst case scenario? I sold 20 $12 puts on FRC. That's the line that you see here. What's the absolute worst? And by the way, my expiration for that is the 21st. So let me put a vertical line here on the 21st, which is right there. I've got that little window of time right there is about a 10% rate of return. So I'm loving that one. However, what's the biggest risk to me? Right? What is the absolute worst case scenario that could possibly happen to me on this trade? What do you guys think it is? I'm curious because I know a lot of people here are options traders. You're selling puts and collecting premium. You know, a lot of people would say, well, the shares get put to me and I am now long from $12, right? That's not the worst case scenario. That's, you know, that's I'm actually okay if that happens. The worst case scenario is that tomorrow or Monday morning, there's a press release that says FRC is out of money. It's bankrupt. They're done. They're declaring bankruptcy. That's the worst possible thing that could happen to me, because what would happen, since I sold those puts, I'm committing to whoever bought that put from me, I'm committing to buy the security at $12. So if they open up at a fraction of a penny and just declare bankruptcy, I now am long at 12. And I have to, you know, I basically am going to lose everything. But remember, my average price won't be 12. It'll be $10.65 because I subtract the premium that I collected. It goes to zero when you own it at 10.65. Don't take away my 15 cents, Kevin. But yeah, that's the worst case scenario. And with these stocks right now, that's the risk, right? I think personally, I think I'm fine. I think I'm okay, but it is a risk. And again, I'm not putting all my capital on this. On this trade, it's going to be, I'm outlaying $24,000 on it, right? $24,000 is the amount that I'm forced to keep open because it's, let's see, I have 20 of them. So that's 2,000 shares at $12 a piece. That's $24,000 is how much I would be locking up. And on this specific trade, I think, I just sworn I got $2,600 worth of premium for the 21st. So there we go. Exactly, Oliver. I could be left holding the bag. So that's the absolute worst case. But given what's going on with the government, the FDIC, the Fed saying they're going to backstop stuff, I don't see that happening. Just don't see it happening at this point. But it could. And again, that's the risk I'm taking. So there you go. Long-winded answer, Zed, on the FRC. Do I think it's going to recover? I think it will, but not right away. I think this is going to take some time for this one to kind of slowly, gradually get a footing, figure out whether they can make it, and then it'll start to drift back up. But we will see this next week, this upcoming week, dozens upon dozens upon dozens of mid to small tier banks reporting earnings, and that will be very interesting. Of course, today you had behemoths, right? Citibank and Wells Fargo and JP Morgan. These are not the tiny little guys. These are monsters. So next week, I think, will be a better indication as to the health of your financial system going forward. Pepe said, Merlin, if that happens, I'll send you to take Recla. That's funny. I would rather put my arm in a garbage disposal unit than ever even think about talking to Sam Seiden ever again. That's just no way. It would be one of the worst. That's the worst case scenario. I'd rather lose all my money on FRC trade than have to talk to that clown ever again. Anyway, let's go from there. So I didn't have time to explain this one, to draw it all out. So there's a question that came through. I know I've been kind of keeping you up to date since I did that article for barchart.com. I still have the Bank of America shares, and I still have the JP Morgan. The Charles Schwab, on that trade I did for barchart.com, I sold the premium. Great rate of return. Did not get exercised, so that trade was dead. I have a new more puts that I sold, which expired today on Charles Schwab. But since this trade's still open, I'll walk you guys through the numbers. So Scott asked, can you explain how you calculated your average price on JP Morgan trade? What happened to your position today? So technically nothing happened to my position today, Scott. But just so you understand, I sold sometime before March 17th. I sold the March 17th put, and I collected $1.50. It was the $32 strike. $132 strike. So I collected $1.50. This is the wrong date. Hold on a second, guys. I was rushing to get these numbers typed in for you, and I obviously put in the wrong number, as you can see, because there is no March 37th. That would be March 31st. Okay, so we look at this. These are the strikes once I was executed. So for example, I sold the 317 puts, the 132s for JP Morgan, and I was executed. It fell below the 132 strike price. I was now long 200 shares of JP Morgan, but I collected $1.50. And I kept selling these options right here. Right now, I'm presently in this last one, which is the April 21st, which is not this weekend, but it will be next weekend's option on that one. So if JP Morgan closes above 132, my JP Morgan shares will disappear out of my account and go away. And then you can calculate out the rate of return. So I should probably fix this one too. That's $1.65. So what's the rate of return there? Well, if you want to know the rate of return, what I have to do is I have to take these premiums that I collected and subtract it from 132. So I got $132. I'm going to take away $1.50. I'm going to take away $1.90. I'm going to take away $1.38. And I'm going to take away $1.65. So right now, my average price on JP Morgan is $125.57. Hope you guys can all see that on the screen. But that's how I calculate my average price. It's the share price that I was executed at, which is 132, and that was back on March 17th. And then over the past few weeks, I've just been selling premium, selling calls against my position, right? So covered call. And now that's brought my dollar cost average down to 125. So when we look at the JP Morgan chart, let me bring that up for you guys here. There's the JP Morgan chart. So obviously, I wish I didn't sell that 421 put, right? It'd be great if I didn't, because then I would be now up huge on this position, but it is what it is. I'm totally fine with that. You notice right now it's at 138. Well, everything above this 132 mark, let me get some of these lines off of here. Everything above this red line is not mine anymore. Whoever bought that call from me, it's theirs. So if by next week it stays above that red line, fine. If it drops back down here, then I will still have my shares and I'll sell calls against my position. But right now, if I was to calculate out that rate of return, that's a great, so to figure out the rate of return, I know we got some math people in the room. I would take 125.57 and subtract that from 132, right? Let me go over here to calculator. So you didn't ask for rate of return, but let's just figure that one out. So 132 minus 125.57 is $6.43. So that's essentially how much I'd make profit per share. So $6.43, divide that by my initial, or my current price, yes, which would be 125, my purchase price, 125.57. So it looks like I made 5.1%. That doesn't quite feel right to me, but yeah, 5.1% would be the rate of return for 1 month on this bad boy, because I started back on the 17th and it'll probably end on the 21st. So there you go, 5.1%. Of course, if I held it through today, I'd make even more on that trade, but there you go. That was the question for Scott. Hopefully I answered that one. And I'm still in it. I didn't take time to write down the Bank of America numbers. That one actually is doing slightly better, and I have more of it. I have 500 of Bank of America, and I only have 200 of the JP Morgan. No, I didn't trigger any PTSD. No worries there, Pepe. Don't you worry. Have I ever tried to bring Gabe Velasquez on the show? So Gabe Velasquez has actually been on the show before. Fine to bring him on. You know, part of it is I don't like chasing people down or asking people to come on the program. You know, generally, when somebody comes on the program, they want to pitch something, they want to sell something, talk about their school, their classes, their book, their whatever. And I don't know. I like it when people don't try to sell anything. You know, when you look at what Sam Evans did on Monday, that was great. I'm like, what are you selling, Sam? He's like, nothing. Just come on and talk to you. That's awesome. But it's hard to find that type of stuff. You know, Gabe's got his own school as well. So bring him on. It's fun. Be fun to have him on the program. I always like having those guys on. All right, let me see what other questions that I have here. So I don't know this company, but here's a question that came through today. This wasn't from Les. I'm sorry. I should go look the email and see who this was from real quickly. This is from Bill. Sorry, I put Les down there. It's from Bill. So Bill says, I subscribed to an alert service that issued a short recommendation on Petros Pharma near the end of day today. What's your opinion? I don't know Petros Pharma, but let me type it in here real quick. Petros Pharmaceuticals, PTPI. All right, so let's see. Okay, so Bill, this is why I don't subscribe to newsletters. Number one, this company looks like crap. Now, I don't care what happened with the news today. This company looks like crap. And I could look at their price chart going all the way back, you name it. Just go back to its inception in 2021 when it did its IPO at $36. It's done nothing but nosedive ever since. Not only that, it looks like it probably had a reverse split. Yeah, it had a 10-to-1 reverse split on this thing, which is a sign that they're doing very poorly and we're going to get delisted. So who knows what the news is today, but you have this huge pop on it and your newsletter said to short it. The only reason I would say your newsletter is probably right is just because the overall trend of the security has been just brutally down. And I mean brutally down. So yes, shorting is probably the right thing. But here's the problem. Let me ask you guys, if you look at the chart like this and you're thinking, great, I want to go short this, which my mind would tell me to do, what would you say is the big problem here? Right? Why would I unequivocally say, do not short this thing? There's a big reason for it. And I'm just curious whether you guys can see it and understand why. Because, again, everything is about risk management. If we go back to the blackjack example that was asked earlier, you want to put yourselves in the house's favor? You want to be the house? Then, well, you should stay away from this one. But realistically, you should be going short. However, shorting something that's a $4 stock is an extreme gamble. How much meat is on that bone? If it goes to zero, you made $4 per share. Okay, great. But what happens if this thing gets, it's pharmaceuticals, I'm not exactly sure what they do, doesn't matter. But what happens if they get a stage 3 drug approval and all of a sudden now this is a cure for cancer or something like that? This thing could jump to $100 a share and you're short. No way in hell am I going to short penny stocks like this. Chase, you're probably right. This is probably a pump and dump. There may have been some news, but this thing looks like it was dying and they just got hooked up to the defibrillator, got shocked. My guess is it'll probably come drifting back down. Now, there's other people here totally right. Margaret says, no shares available. Volume. Here's the volume on this bad boy. Today alone, you had 76 million shares traded. That's awesome. Great. But just a couple days ago, 1,000 shares traded, 3,005. This thing averages like 2,000 shares traded per day. No way you'd want to touch this thing. This is a suicide stock, man. Absolutely ridiculous. I wouldn't touch this with your money. And Bill, I don't mean to be condescending or rude, but this is not the key to making a longevity or a life of being a trader. This is absolute gambling if you're trading pharmaceutical stocks. Now, many of you know I have a rule about penny stocks. I am not allowed to trade penny stocks. And there's a reason for it. I'm not allowed to trade penny stocks or pharmaceuticals. So drug stocks have burned me in the past. I was short a company where I actually did the fundamental analysis. I looked through all the fundamentals of it. The company was garbage. They were losing money faster every quarter. I'm like, this is things on a fast train to zero. And then they got not phase 3, but like phase 2 drug approval from the FDA, and the thing jumped up like 200%. And I was pretty heavily short. Almost blew that entire account off that one. So just stay away from it. Be really, really careful. Yeah, I wouldn't touch this bad boy. It looks exciting. And again, you got to ask yourself, Bill, if you're subscribed to this newsletter, first off, how much are you paying for it? And number 2, is this really good advice? Is this really good advice for them to issue a short recommendation on a stock that's $4.20? I would personally say it's not, right? Would not touch it at all. Anyway, thank you, Larry. Larry's texting me during the show, Larry. I know you're watching right now. All right, let me see what I got from you guys. I'm getting Boiler Room vibes. Man, I like that movie, actually. Boiler Room was a great movie. And I didn't have the experience of Boiler Room per se, but I was in a big trading floor where everybody was trading something different, and that was an awesome experience. And man, the characters and how people were trying to manipulate you to buy their stocks just in that closed office space, really interesting. Human behavior and psychology is so rampant in trading and investing. My guess is this is probably a small piece of news that got pumped even more through newsletters like this, and now they're probably flipping the other side. So pump and dump, absolutely. All right, you guys had a whole bunch of comments in here. We should bring Tim Sykes to talk about pump and dumps. Hey, I'm not a big fan of Tim Sykes, unfortunately. I'm sorry. He makes more money off his newsletters now than he did off of trading. He got lucky with some penny stocks, and now he's this guru out that everyone thinks walks on water. That's fine. One thing I do like about Tim Sykes is he goes after, there's a guy out there, his name is Oliver Velez. And Oliver Velez, when I was back in the late 90s, was getting sued by dozens of people for fraud and stealing of money, and he took Pristine, and the rumor was he ruined Pristine, and then he had, I trade your capital and ruin that. So I went to a trade show once, and Tim Sykes sat in the front row and was live tweeting and just shredding Oliver Velez to pieces, and it was awesome. And it was so bad, it got so bad that Oliver complained, and they got Timothy Sykes thrown out. But he goes after these charlatans. But it's funny how all of a sudden you may have become one yourself. Hey, Merlin, tell David Warner, Tom from the Forex program says hello, and I'll be sorry. Aw, yeah, I know. Yeah, I think we're all sorry for that, Tom. But yeah, well, he'll be on this show. He'll be on. You'll join and say hi whenever you can on this program. Timothy answers by pump and dump. Yep. He claims to know how to pump and dump works, basically. Everybody knows how pump and dump. Look, there was a guy, his name was Tokyo Joe. So early when I got started in the late 90s, there was a guy named Tokyo Joe, and you paid for this newsletter subscription service at Tokyo Joe. And what Tokyo Joe would do is he would give you recommendations to buy PTPI at whatever, 95 cents. So let's bring up the chart here, and here's what would happen. It would be somewhere around here, and he'd say, oh, okay, it's trading at 95 cents, buy it at 95. But what he didn't tell you is the day before or the week before or the month before, he loaded up, right? Bought tens of thousands, bought millions of shares of this penny stock at a much lower price. So he issues his newsletter, and he knows, okay, it's coming out on Wednesday, so he builds himself, let's say, a 2 million share position of PTPI Monday and Tuesday. Wednesday, he knows he's issuing the release, so he basically sits there and sells out to everybody that's buying it. He tells you to buy it, and he's the one selling you the shares. He got busted by regulators for that, but he's one of the few that got caught. There are so many pump and dump traders out there, or not traders, pump and dump people out there. I would argue that Jim Cramer might be a good example of pump and dump. I don't have access to his trading records, but boy, I tell you what, he's always pumping something. You know that he has access to his speech before he says it. Jim Cramer doesn't do a show like this, which is 100% live. I don't have any teleprompter pieces scripting me, telling me what to say. You go on CNBC, you go on Fox, especially those types of shows, there is a script. There is a teleprompter for certain people to read. So when he goes out to do his show, he already knows, today I'm going to talk about Bank of America. I'm going to say a buy on JP Morgan. I'm going to say a sell on Morgan Stanley. And that information is written by script writers. Now, I question, is that information being leaked out to somebody beforehand? Because if I knew that Jim Cramer is going to say buy on a specific stock, it used to be that thing would pop up right away and then sell down over the next 12 sessions. So I think everybody, to some extent, is pumping and dumping. I generally don't talk about most of my trades that I do, but I will obviously tell you, since I made it public about my JP Morgan trade, my Bank of America, and Charles Schwab, open and transparent, and I'll tell you everything I do along the way. But I don't want to be a front runner, pump and dump kind of person. I think that's kind of shady and scummy. But as long as you tell people exactly what you're doing, I think you'll be safe out there. Tom says, I have 0 DTE friends that only look at 1 minute candles. Wow. And they'd short that and be out within minutes, stop loss at 1x. That's cool, but you're probably not going to get options on PTPI just because of liquidity issues. You're probably not going to get options, but I get that strategy. And I think that's fine, Tom. I actually do think that that's fine, but you know very well that trading 1 minute on a stock that's up 354% in a day does it get much riskier? Right? Because that thing could jump up to be 600 up on the day or down back to 0 gains on the day. So it could whipsaw so quickly. It brings in a whole nother level of risk management. Sure, doing 0 day-to-day expiration can be fine on these if you know what you're doing and you're very quick with your execution and you have good risk management, because you could absolutely get slaughtered on these if you're on the wrong side. Any update on ETH? ETH is good today. ETH has been great. So the good news for anybody who holds Ethereum, as I do, I definitely have some Ethereum out there. Let me bring up my crypto side and show you the ETH chart here. Boom. So we're back up to 2100. Yeah. It's funny because ever since they did that upgrade, the Shanghai upgrade, we're starting to see this more and more of a rally out and keep on going. So let me ask you this, for anybody who thinks that, anybody who is an Ethereum fan, why do you suppose Ethereum is rocking like this? Why is it absolutely screaming to the upside over the last 2 days? We'll go since the upgrade happened, which was Wednesday afternoon. So we'll go from, let's just say, the open of that candle to there. It's up almost 12% in 3 trading sessions. Why is that? Just curious what you guys think. So I'll tell you, I'm just kind of waiting for you guys to type in because I know there's a bit of a lag time, and I sure wish I had some whiskey over here. Instead, I'm drinking cold ice water. The reason for it is this. There's a roadmap that Vitalik Buterin put out for Ethereum. And he said, it's the surge, splurge, purge, merge, all these different urge names for different phases of the upgrade. Now, the reason that Ethereum is now ripping to the upside is, as Margaret says, because of the news, the upgrade happened successfully. So what's great is, as soon as one upgrade is done, and think of this as a business, right? If you have this whole list of obstacles for your business to overcome till you get to that level that you want to be at, your perfect business running, you've got dozens of small obstacles that need to be fixed. What this upgrade did on Wednesday is it fixed a fundamental problem, which now allowed people to unstake their cryptocurrency from the network. So all this attention has been focused on that. Now that it's implemented, and Ethereum is now functioning with this new update, there's been no problems, the entire development community can now say, that obstacle is done. Let's move it over here and focus on the next one. And the next obstacle is scalability. What they're going to be doing is sharding. And the hope is, fingers crossed, that Ethereum can implement sharding by the end of the year. Now, the roadmap says maybe sometime early 2024. But if all eyes are now on this new upgrade, that could be huge, because once you have that upgrade in place, and let's say they do start to do sharding, and just so you know what sharding is, imagine you have one giant cube. Sharding says, I'm going to split that up into a certain amount, let's say 64 different pieces. I still have the structure of the cube, but I can now break up all the data, and let's assume that cube processes 1,000 transactions per second. If I can now split that into 64 separate shards, which can each process in parallel, instead of 1,000 transactions per second for the one's network, a whole cube, I now have 64,000 transactions per second that can be done. And so all of a sudden, scalability for that whole thing goes through the roof. So I said sharding, Larry, not shart. I didn't say sharting. That's different. Sharding, as in a shard with a D. Oh, Larry. So if Ethereum can get to the level that they want to with this upgrade that should happen here, hopefully by the end of the year, that means that Ethereum can go from 15 transactions per second, which makes it slow and cumbersome and falling out of favor because of cost, to doing 1,500 transactions per second, which now puts it above Cardano. And now puts it above, well, right around Avalanche, right? So it now makes it a real contender from a scalability perspective. And then there's another upgrade, which is expected to happen in late 2024 or 2025, which will do ZK rollups, which will do another 100x, which put Ethereum at 150,000 transactions per second. Now imagine if you already are the biggest business in the world, but your competition's way faster than you. And over the next 2 years, you modify things with your business so you now are faster than those new upstarts. What would happen is Solana, Cardano, Avalanche, Algorand, Sui, Aptos, all of a sudden, those ones which sound really promising because they're fast, all of a sudden become somewhat irrelevant. And you get one gigantic juggernaut, which is Ethereum. So I think the reason you're seeing this nice move up here is optimism that, hey, not only did the upgrade go through successfully, but the fear that everyone was going to sell their crypto, pull their Ethereum out and dump it right away, that didn't happen. So now you have people committing to the Ethereum network. Now focus can be on the upgrade, which should happen, hopefully, fingers crossed, by the end of the year. And it really makes people question, do we see Ethereum rallying back up to those highs we saw just last year, right? Does it get up to 4,000? Does it get up to 5,000? I think it does eventually. Hey, Kevin, thank you so much. I appreciate that. Very much. And not only, as he says, just showing some love. Thanks for doing what you do every day. And I appreciate your support over the years, Kevin. I know you don't get to watch live every day, but I do get your messages and things. So thank you very much. I do appreciate that. So let me see. What was your question? Let me start with Tom's here. I looked at today's 1 minute on PTPI, and it looked tamer than the S&P. Really? It does have options? Open interest? Okay, yeah. You go for that bad boy. Open interest of 7 on the call side and none on the puts. It's all you, Tom. Let me know how that one goes. Unless I missed it, could you do a show on the new info with the CBDC? You know what? I should probably do something on that next week, explaining details such as how you've done a crypto episode. Sure, we'll talk. Let me do that one next week. I want to have some graphics prepared for that. Am I really busy next week? I think I should be fine to do it next week, because more people have been asking about the CBDC, the Fed now, reserve currency, dollar losing status. I think that'd be a really a powerful one for just about everybody. So I'll get to that one. Okay, so I'm glad you explained sharding, because some of us might imagine something. Yes, I know. I always wonder if OT's founder is a trader. He does trade, not actively. So I've actually seen his portfolio. So yeah, he's more of a, I would say more of a position trader, just because of his time. But yeah, I've seen his portfolio. So yes, he does. Unlike some people who claim they trade very successfully and get audited by the feds, and the feds say, you lose money, right? That's a totally different one. Anyway, let's see. Ethereum is also following Bitcoin, so that's another reason for going up. Yeah, but you have to understand that there's huge differences between Bitcoin and Ethereum, right? Bitcoin is a peer-to-peer payment network, and that's predominantly it. Ethereum is bringing up alternate finance. It's bringing up decentralized exchanges. You don't have decentralized exchanges on Bitcoin, right? You don't have swap sites on Bitcoin's network, but you do have those on Ethereum. And Ethereum, being one of the largest decentralized computers in the world, really has a tremendous amount of potential going forward, and that's why it's the number 2 holding in my portfolio. It may actually have moved up now because of the current move up in Ethereum in the last couple of days. And you look at Bitcoin. Bitcoin's been good as well, but Ethereum really is a better performer over the past week or so. So there you go. Let's see. What else do we have? I think I got it. What do I want to do? Tom, so maybe I will double the open interest in PTPI and show up there. Do it. Let's do your egg Tom. Do it. Come on. Do it. Do it. We'll egg Tom on. Be that guy who gets alerted to us that, hey, there's unusual options activity on PTPI. And we can say, that was Tom. That was Tom. We know it. All right. I think that is pretty much what I had for today. That's it. Let me show you what's going to happen out here for Monday. Here is your economic calendar and earnings calendar. So let's just get that out of the way. And I really need a glass of whiskey. It is that type of day. So here's your calendar for Monday. Monday, we don't have groundbreaking or earth-shattering type of economic news. There is some better stuff coming out later on in the week for the U.S. markets, but you do have the Empire State Manufacturing Index. One thing to note here is you see here it says negative 17.7. So the way that these manufacturing indexes work, whether that's the Chicago, the Philly, the Empire, Richmond, it oscillates above and below zero. So anything that's negative means a contraction and basically overall negativity for manufacturing within that geographical area, in this case, New York. So being at negative 17, not good. Yes, it's moving back up a little bit from negative 24, but still expectations are we're going to be negative 17, and that does not bode well for manufacturing in the New York area. So that's just one to keep an eye on, from an economic perspective. You do have TIC long-term purchases coming out at 1 p.m. on Monday. These are Pacific times. And then you have the NAHB Housing Market Index, but that's pretty much it. There's some announcements from China, but I pretty much leave China all alone because I don't care about China's financials. All right, next. Here's your earnings for Monday. So this one I'm not worried about because I had, let's see, I think I have to check. I'm pretty sure my Charles Schwab expired today. If not, it expires next Friday. So this could be an interesting one for me. But I sold Charles Schwab puts. That's the only one on this list that I have. But notice how many financials there are. Charles Schwab, State Street, HDFC Bank Limited, M&T Bank. You have Pinnacle Financial Partners, Service First Bank Shares. Yep. FB Financial, Cross First Bank Shares. There are dozens and dozens of banks reporting this week. And again, lots of small stuff out there. So that would be a very interesting one on Monday, setting the tone for the remainder of the week because, again, there's so many financials reporting. Charles Schwab is the big one that's reporting on Monday. But you also have JB Hunt Transportation's reporting as well. So that's it. Let me see. AMBP pays a 10-cent dividend each quarter to hit a new low at $3.59. I think didn't we talk about this one in the past? Together with its subsidiaries, okay. Why is this sell-off of AMPB with get a yield each quarter? Well, just because you get a yield doesn't mean it's a good company, right? They're paying to keep people buying their shares. Again, I believe, and this is just from all the stuff I learned in finance, I believe that you have a choice as a business of what to do with your earnings. And I'll let you guys answer this one. You tell me which one. Wait till I finish the explanation, and you tell me which one you would rather have. So you invest in Merlin's Widgets, right? You think it's a great company, and obviously your goal is you want your share price to go up. So you invest in Merlin's Widgets. I haven't gotten the question yet. You invest in Merlin's Widgets. Would you rather me, as the business owner, let's say I am making a little bit of a profit. Would you rather me pay you a dividend where you get a little chunk every quarter? Or would you rather me take that money that I would pay you and invest it in my company to make my company bigger, and maybe with that, the share price goes up 5x over the next year? But if I pay the dividend, my share price goes up 1x, right? So people get hung up on dividends because, oh, I'm getting this constant stream of payments. But that company is going to need that money to grow their operations, especially in tough times. So which one would you rather have? A company that pays no dividend but has a much higher growth prospect, or a company that pays dividends and has very low growth prospect? Which camp would you put yourself in? And I know it's not cut and dry. You can't make that statement for every single company, right? However, I think that anybody who's nearing retirement and now needs a schedule, a plan of I need X amount of dollars per quarter or per month to live off of, dividends can be great. But I would much rather have the company invest that money and grow that company at a larger clip, especially during good times, right? If the market's ripping like it has been for the last couple of years, don't pay me a dividend. Keep that money, put it into the company, and make that thing grow as big as possible, because my share price could go from $5 to $50, whereas if I have a dividend, it might go from $5 to $6. So I get it all the time when I used to do power trading workshops, is somebody be like, I've got a dividend, I got a stock that's paying a 10% dividend. And I bring up the price of the chart and I go, you know, your stock's down 65%. Well, yeah, but I get a 10% dividend. But your stock's down 65%. And you keep going back and forth. And ultimately, you lose so much more by holding those shares if they decline in value. So anyway, so the PE is also very low. Price to earnings is really low, but again, I don't know without looking at all the fundamentals, Michael. Fundamentals isn't something I really look at. I don't care about fundamentals anymore. I used to when I was in college and when working for a financial planning firm. I just don't trust it. It's so much easier for me to look over here at this price chart right here and say, okay, I know what's going on. I don't need fundamentals to tell me what price is doing. I can look at this chart and with a pretty good degree of probability, anticipate where it's going to go. And if it doesn't do what I think it's going to do, I got a stop loss in place. I'm fine to be wrong, move on. But what I don't want to do is sit there and be invested in a company and be like, and this is probably where you're torturing yourself, Michael, is you're going out there going, man, I got this AMBP stock, really low PE ratio. They pay a dividend and the stock is just tanking. So let's go AMBP. Yeah. I mean, this is the part you're scratching your head, Michael, going, what the hell is going on, right? I know you're doing it if you're long this thing. You're going, how the hell is this happening? It's a good company, right? Because you're looking at their fundamentals, believing those fundamentals. I don't know. I don't know if I really trust what they're issuing, because clearly something's wrong, and they're using that 10% or 10-cent dividend as a hook to keep you in it. But the share price, and I think this is the last time you mentioned it was about a week ago, it was down 37%. Well, it's now down 39%. So I would stay away from it. Hey, Pepe, thank you very much. I appreciate that. So thank you for all the sharing knowledge that you do every day for us. I appreciate that. Thank you so much, Pepe. And we need to have a beer before you move out of California. I understand. I know I'm a tough one to get a hold of, but let's you're local, so let's grab a beer one of these days before you head out. That's not Larry Jacobson. Get that out of there. Okay. Let's see. Check out all the factories in the U.S. Yeah. Again, I can line up all the information that any company has produced and try to make sense of it all. But it reminds me, years ago, I talked to a buddy of mine who was a CEO, and he had a joke. He said, you know, when I was hiring my chief financial officer, I was bringing all these different people, and he said I would give them a little test. I'd give them a sheet of numbers, and I would ask them to make this. He would ask them, can you make this do this? And this one CFO that he ultimately ended up hiring said something like, I can make it say whatever you want. What do you want it to say? And to me, that is so true about a company. With the tax laws, with GAAP, generally accepted accounting principles, you can massage numbers and move things around through different corporations and shells. So in one number sheet, I can make this thing look like it's the greatest thing since sliced bread. But in reality, I've done certain things from an accounting perspective which don't make it look very good. And that's why I just don't trust fundamental information. Can you please answer my question? All right, where are you at, KF? Let's see, KF, type it in again because I don't see where your question was. I'm glad you explained charting because, well, what's the question, KF? Let me know what it is, and I'll answer it. Because I'm just about to wrap up. I got 9 minutes left, and I'm parched. I have no whiskey on the show today, so I need a drink. I'll wait for you to type in your question here real quick, KF, and then I'm going to move on and wrap up the show. So next week, I don't have any guests scheduled. I have a friend of mine who I've been talking to, and maybe I'll bring him on the show. Again, he's trying to sell his stuff. But let's see. The key fundamental is growth of earnings. Yep, a minor key is cost of capital. But again, you can manipulate earnings. You can take this kind of write-off here, and you can move things around. So yes, you do want to see earnings grow. Obviously, that's extremely important. But there's one. You could have a company that's got earnings have been growing and growing. Let's say earnings are growing 10% quarter over quarter. Just hypothetical. And then I look at the cost of capital, and they're actually bringing on more and more debt to the tune of 15% per quarter. So you're growing 10%, but your debt load is increasing by 15%. Net, that's a loser, right? Good debt versus bad debt. In the comments of yesterday's video, well, type it in, KF. What was your question? You're going to make me go to Yahoo just to find that one real quick, or to YouTube to find it. You know your question. Just type it in. I'll get to it. And if not, I'm going to real quickly try to get this one here. For KF, what do we got? It says on yesterday's show. So that was, thanks for okay. Here's another one. What instructor or YouTube channel can you recommend that would teach high probability techniques about quick in and out day trading or very short-term swing trading? I don't recommend really anybody. I think you got to do your own due diligence because I personally am a skeptic. I personally think that most people, I hate to say it, I think most people are trying to pull the wool over your eyes. That's why I've been very selective about who I associate myself with. It's very difficult to know exactly what somebody is doing. For example, there's a guy out of New York City who claims that he is God's gift to reading the tape, meaning time and sales, reading transactions. And I was one of the best tape readers in the business back in the late 90s, and it doesn't work anymore. So this guy is saying that this system works, and it doesn't. And you'll never know that he's probably not making money. He's probably selling you the class or the technique, and that's how he's making his money. So, that's one of the things I really loved about OTA. I really do, is the diversity of instructors. So you have somebody who's specialized more longer term, you have somebody who specializes in shorter term, yet there's this core content that is taught. And they kind of build their house on top of that in their own unique technique. So I don't really have anybody to recommend to you, KF, from a day trading perspective. I'm not really a recommender of other people's strategies. I bring guests on the program so that you can make up your own mind about that individual and their trading strategy. But I don't want to put my stamp of approval on any specific presenter or trader out there. I mean, there's a couple that aren't really active day traders that I know. Sam Evans was a great one. Sam Evans did a lot of short-term trading, and that's what he's going to do for his hedge fund, but he's no longer teaching. So, you're OTA grad, just go to XLTs. Yep, exactly. That's where I was kind of going with that, Kevin, is you have such diversity in those XLTs. And granted, we've lost a lot of instructors over the years because of all the things that have gone on, but there's still a lot of great instructors in there that you can gain knowledge about specific trading strategies, short-term stuff like that. Most of all tech companies are doing layoffs like Meta Tech. Yep, that they are. Between the guys I brought on here, one of my favorites, I love Sean Reed because I just really like his strategy, and he's just very specific and methodical about it. I'm trying to think off the top of my head. That's just options. I don't know. I'll have to think about it, KF. Yeah. I don't like to hang my hat on anybody because I don't want you to be like, oh, well, that's the guy I got to go learn from. You have to make up your decision. Anyway. Okay, so let me wrap up here. It's Friday. I need a glass of whiskey. Thank you guys so much. And for those of you, we had some nice contributions from Pepe and from Kevin, so thank you guys for that. I appreciate that. I will put that to use tonight. I am definitely going to go out local around here in Orange County and have a couple beers and some nice, maybe a glass of whiskey at one of my local watering holes. So I hope you guys enjoyed. Hope you had a great week. Next week, I don't have any guests planned, so if you have a specific topic, you can email me at TraderMerlin@gmail.com, or as KF and Todd did, you can put your comments down below the video for today, and I will incorporate those into the slides, which I thought I had already, but I'll put those into the slides. So have a fantastic remainder of your weekend, everybody. Go do something fun, live your life, and I will see y'all on Monday. Take care, everybody.